Check. All right, gang, let's get a quick audio and video check in. We should be good to go. All right, there we go. All right, so welcome to Charts and Coffee for Tuesday, January 5. I still want to say December. All right, good to see everybody. And I'm not sure that my camera's cooperating here this morning, but nonetheless, I think you guys can hear me. So, okay, excellent. Excellent. All right. Just bear with me here. All right, so good to see everybody. Happy Tuesday. Hope everyone is doing well. And let's get to it, all right? By the way, I'm on TradingView charts this morning. And one of the charts that I'm looking at right now is one that I had a lot of questions about yesterday, and that was Coke. Now, in our Sector Secrets Mastery, we had already played Coke. We had played Coke to the long side. So, one of the things that I teach is if the structure of a market is still one that we want to engage in where there's still opportunity. So when we see a move like that, is there an opportunity to get in again? And mostly what I told traders is, be cautious. And what I want to talk about here is something we're likely to see today, even going into tomorrow, and that is volatility and how we want to use volatility. So when you see a market that makes a quote unquote big move, right? Part of the secret sauce of what I like to share is where are we within the historical volatility, right? Not a 7-period or 14-period ATR, but where are we within the context of, say, a 6-month look back or greater of volatility? So keep that in mind the next couple of days. Just a quick little public service announcement as we kick off the morning here. All right, so let's get to it again. Happy Tuesday, everybody. Great to see everyone. All right, can I analyze RIG and BTU? Hey there, Pablo. Sure. All right, so let's take a look at, oh, there I am. So it looks like I got the video up and running. Okay, so RIG is Transocean, right? I like the double green. And then if I think about where Transocean is, right, this is something we talk about quite a bit within the overall approach that I have to equities, and that is where do we have exposure to Transocean? And what I like to do then is, let's do this. What I'm going to do is I'm going to change this particular chart to reflect two tickers. One is RIG, the other is the OIH, where RIG is about 4.5% weighting. All right. So with that being said, RIG itself, double green, OIH, which is the ETF influence on RIG with good volume, also double green. So yeah, I like this. I like this particular setup. I like the pullback opportunity. There's a number of pullback opportunities, I think, that are tracking with crude oil in general. Names like Exxon, Schlumberger, Phillips 66, and I'd put RIG on the list as well. BTU, sure. So BTU, so take a look at this, the price of the stock. My issue isn't that the market could not turn into a move higher. In fact, I've got a 2 red dot entry that happened already that preceded, by the way, these 2 days higher. Nice 2 red dot entry. However, the bigger issue I have with BTU is the price. It's going to behave like a penny stock. Not that there's anything wrong with that, but it's a completely different type of trading. And again, I'm going to look at where is their exposure the BTU has in the passive investing universe, where there's volume, etc. So I would steer clear of names like this. However, structurally, yeah, I like it. Someone said, well, Rog, okay, we get it. You don't like it, but what would you do? Yeah, I'd look for a long position on a pullback. Absolutely. Absolutely. And yes, Happy New Year to you too, Pablo. All right, so let's do this. Next up is, yes, thank you. Happy New Year to you guys. Steve says, yep, CNC ride. Charts and coffee. Absolutely. Will I be updating the HPMRs for simpler folks? Right now, M. Bartlett, so every week I take a look at the volatility via this site right here. And if I don't have significant changes to the volatility numbers, I typically won't go through the minutia of having to recalculate them because they're still going to be valid. And right now, I think because the way the markets were moving before the New Year's holiday, there's not a lot of volatility that I need to recalculate for. However, what I did want to do was recalculate for probably Thursday, because what I'm trying to do is look at days where there's going to be an increase of volatility that's going to impact the historical volatility levels, and then I'll go ahead and recalculate. So this week, first of the year, kind of quiet end of the year, I'll look to recalculate on Thursdays. And then Bartlett, let me be also clear, that's only going to be for simpler futures, folks. A lot of my tools, especially in 2021, I'm going to be sharing them specifically with the rooms that I'm in because I've got to be able to support them, installation, updates, things like that. But that will be in the simpler futures room Thursday morning after whatever volatility we're going to see today. If we see a big volatility move today, I might go ahead and update my HPMRs, which I don't have running on this particular chart, but these are HPMRs on TradeStation. So if I were to look at the hourly price movement ranges on TradeStation, this is a process that I created about, I guess, coming up on 8 years ago now, which is using historical price movement ranges that vary from hour to hour and calculate or project support and resistance levels based on that volatility. Very cool, elegantly simple, and big kudos to my buddies over at AutoChartist for giving me the kind of data that I can plug into a simple arithmetic formula to project these levels. So thanks for the question. Yeah, maybe tomorrow, depending on what we see today with the Georgia runoff shenanigans. Boy, gang, do I hate politics, the way that they affect the markets. I know it's a pastime, it's a national pastime, but golly, it just makes for really ugly trading. Can we take a look at W and SHAK? Absolutely. Let's jump back on over there. Okay, W. I'll steer clear of Wayfair for now. I don't particularly love the structure of this one. However, that being said, and Stephen, this is a market that's, well, yellow, right? You can see down in here the trade flag, this one trade flag that has the 81321. The second one is the one I'm looking at, and that's the one that includes a 34, and that's yellow. So this is what I would call a yellow market, meaning it's a choppy market. There's no dominant trend at the moment. However, if I go back and look at what the dominant trend was, the trend that was, right, as I like to say, was up. That means I'm going to have a bullish bias going forward. And if I can get an oversold buy zone that I can buy off of, that's really what I'm interested in here. An oversold buy zone that I can buy off of somewhere in there, I'm game, right? So it may not be high on my list of stocks to look at because of the lack of that double green trending clarity, but it's certainly not one that we cannot potentially buy. All right, let's then move on to Shake Shack. So if I take a look at SHAK, SHAK. All right, so what do I want to do with SHAK? Well, same process. First of all, does SHAK have any major exposure in passive investing? Not really. And so then I will respect the trend that was, even though we've gone yellow most recently. And that's really, in this case, reflecting the pullback that we've seen And yes, I'm willing to be a buyer in SHAK. The thing that we also need to be aware of is, where are we within the passive investing universe? In other words, where are we within that, again, weighting, as we mentioned, none. And the second thing is, where are we within the calendar going into earnings? So one of the things that I teach is this 642 countdown into earnings. And yeah, this is fine. This is fine. And if it's a double green market for the most part, can I look for more upside? Yeah, I'm willing to look for more upside in something like SHAK. Again, it won't be high on my list because it doesn't have exposure to passive investing. In other words, gang, it's not a big player in an ETF. It's not a big player in an index. And if I don't have that kind of exposure, to me, what it is just sort of, it's its own little world. And I typically don't like to prioritize stocks that I can't trace back to a boat being affected by a tide. Okay, probabilities are higher when you know a certain stock's going to move with a larger group of stocks. All right. So not my favorite. I would be patient because of the way that we have sold off, and I would wait for an inside day or a minor low before I do anything. So yeah, they've lost their double greens, Stephen. They're both buyable in different ways. I would just be patient. Okay. Lots of blue light specials. I absolutely agree. Lots of blue light specials. For those of you that don't know what that means, that simply means the market went on sale yesterday. It went on sale a little earlier than I would have liked, however. In other words, it went on sale before the window going into the week of the 11th and the week of the 18th. Why is that problematic? Well, we talked about this before the end of the year. And that is, we have a tendency based on a 5 and 15-year composite for the market to pull back mid to late month. And if that's what we're looking at, that's what we're expecting to see. Yesterday's pullback was really soon. It was a little sooner than I would have liked. And I don't know that yesterday's pullback really just wasn't the culmination of, it's the new year. That first day of the new year, I'm not rushing into the market, especially on a Monday, first day of the new year. But the first day of the new year, I'm not going to rush back into the market. Second thing, UK shutdown. I mean, look, we had Prime Minister Boris Johnson, on television talking about this new virulent strain of COVID and shutting down the United Kingdom. You think the market didn't freak out about that? Then you add the political shenanigans of today, tomorrow. You add in the there's just so much of the market woke up to absolutely hating, and boom, a lot of things went on sale. I agree. Yeah. But there's that old saying, beware of going broke, saving money, right? And that means that I don't want to just simply buy something because it's on sale. I want to make sure that I'm focusing on something that I wanted, that is high quality, and right now is trading at a discount. So yeah, let's take a look at AMD. Sure. So AMD is a narrative that I really like. Why? Well, first of all, it has really good weighting in passive investing. It's weighted quite heavily in the SMH. So let's add that down here. All right. Now the SMH remains double green, which I like. And what I've been wanting to do is change these to something a little bit more visible. So I'm going to change these to, those diamonds look pretty cool, but let's change these to squares. I think they're a little easier to see. Okay. So you'll notice, all right, you'll notice that the broader SMH is still double green while AMD has gone yellow. Now, all my cards on the table, we're long AMD. We're long AMD in Sector Secrets Mastery. So we've already bought back in here, not there. No. Right? We're looking for a nice, we're looking for the stock to go on sale. So it did. Are there stocks that are double green within a double green? I mean, that's ideally what we look for. But this is buyable, and I like AMD, and I'm just looking for another move higher. Yesterday, the market had a heck of a roller coaster, right? AMD got very close to our first target, but we've got plenty of time. Never make time your enemy when you're playing directional in terms of options. Which if you're playing debits, right? You've paid for something, you're not collecting a credit. If you're playing debits, you're playing directionally. So don't be tussling with time when you're playing with options. In other words, give yourself enough time. And that's probably something that's not discussed enough. The component of time within the cost, within your budget of options trading. And if you don't know what I mean by budget, definitely, the idea of a budget, the idea of how many contracts can I buy, the idea of how much can I lose, how much should I spend? I mean, these are all part of this idea of a budget. And if you haven't registered already, we'll be talking about this some on Wednesday. Go ahead and register for the webinar that I'll be doing this Wednesday at 8 p.m. Eastern. All right. We'll be talking about options on ETFs, options on stocks. We'll be talking about concepts like budget and affordability and risk and how that actually is the calculation for your position sizing, making sure that you can consistently have winners that are well, obviously going to outnumber losers. But I think a big thing a lot of traders do is they let the pendulum of risk and reward swing too much. Either they strike out and they lose all their debit on what they paid for the option, or they're hitting a home run. That kind of frenetic trading is just not going to lead to the kind of equity curve that we want, which is a nice, smooth, upward equity curve, not this kind of thing. Oh yeah, that is not what we want to do, and yet that's what most traders do. And so we'll be talking about all that on Wednesday. So you can check that out at simpletrading.com/hour. We'll be doing that live, so you can ask me questions on Wednesday. This Wednesday, as in mañana. Okay, next up is we take a look at NAT. Sure. All right, so looking at NAT, and I again, for some of the same reasons we talked about a sub $10, sub $20 stock. Yeah, I'm going to leave this one alone. Although, look, this is where looking at sort of the launch pad via volume and standard deviations or sort of a breach of the average true range of the market could be interesting. I mean, that's sort of your early indication. I call it a launch pad of a inexpensive stock finally getting attention, because that's really what you're waiting on here, right? You're waiting for the party to get started. You're waiting for the attention. So I would for now steer clear of that. That's just me. It doesn't mean it's not buyable. It's just not something that at the moment is giving me the kind of cues that I'm, by my process, allowed to take advantage of. And again, no significant weighting in passive investing. So it's not like I can look at a tide rising to carry that specific boat named NAT. I like the potential there, Eric, but I can't do anything with it yet. All right, next up is Checkpoint. Okay, so CHKP, double green, had a heck of a blue light special yesterday. In terms of weighting, again, look, it's in a couple different ETFs. The one that comes to mind is actually the MSCII shares for Israel. That's where it's almost 10%. Overall, I'd probably leave this one alone personally. But if you want to bounce it off anything, Moneymaker Aspiration, I like it. I like the name. What I would do is I would bounce it off EIS. All right. I'll bounce it off EIS. There we go. Which is double green. So maybe look at the tide in this case versus the volatility of this individual boat. Okay. All right, gang. And with that, I've got to wrap it up. Got to head on over to my day job, do a little day trading in the Simpler Futures room. As always, thank you for joining me every morning for Charts and Coffee. Looking forward to a whole new series of episodes for the new year. Thank you so much. And I'll see you guys tomorrow, 9 a.m. All right, gang. Be good to each other.